All right, 18-1 work together is where we're starting. So our company name is Klein Incorporated. We've got a few journals down here that we're going to fill out, and we've got 4 transactions that we're going to deal with. First transaction, on March 3rd, we drew $6,500 on its line of credit, receipt number 146. So basically what that means is we're borrowing money. We have a line of credit from a bank or wherever it is, and we're taking out $6,500. Okay, receipt, so we received that money, 146. So we're going to go to our cash receipts journal, and on March 3rd, our account title is going to be line of credit. So this is kind of a new account title that we hadn't messed with yet. All right. In a cash receipt journal, you always have a cash debit. So we're receiving this cash, we're taking out that loan, so we're putting money in our pocket, $6,500, okay? The rest of the account, the special columns accounts, have nothing to do with a line of credit. Accounts receivable means we're supposed to be getting money. Sales, we're supposed to be making a sale. So none of that applies to us. So the credit has to be in the general column, okay? And our document number was a receipt R146. All right, so we drew $6,500 on the line of credit. So our account title's line of credit, general credit, cash debit. All right, that's our first transaction. Next up, on the 26th, we signed a 90-day 10% note to MVT Supply for an extension of time on our accounts payable, $2,400. So accounts payable means we owe somebody money, all right? And for whatever reason, we were not able to pay it back on time. So what's going to happen is they're going to basically loan us this money. Actually, they're not giving us any money though, but they're giving us a break, and they're going to let us pay it back in 90 days, but they're going to charge us a 10% interest rate. Okay? So in our general journal on March 26th, okay, we're going to have we originally owed MVT this money, and so we had an accounts payable account with them, but basically they're clearing that off and saying, okay, you no longer owe us for the accounts payable portion. We're going to put it into a loan for you, which is a notes payable. Okay, so we're going to take it out of accounts payable, and you put the company name. Okay, so we no longer officially owe MVT Supply that money as far as our accounts payables go. Okay, we're writing that off, and we're going to put it into a note. All right, so our down here, this is going to be a notes payable. So we take it out of accounts payable and just transfer it over to notes payable, where the loan is going to be there so that we can actually pay our interest that we owe them. Okay, the amount is $2,400, so the debit is 24 and the credit is 24. Those are the same. Okay, accounts payable, if you think about it, that's a liability. The normal balance for liabilities are credits. So when you debit it, you're taking it out of accounts payable. And so we're saying we no longer owe MVT Supply that money. However, we really truly do. We're just putting it into a loan for a notes payable. Okay, so notes payable is a liability, so the normal balance is credit. Our document number here was Memo 92. Okay. So third transaction, on June 24th, we are paying cash for the maturity value of that March 26th note. The principal was $2,400 plus our interest, and this is a check, $362. Okay, so notice we took out the loan on March 26th. June 24th, we're coming back to pay it. April, May, June, 90 days, 3 months. Okay, so paid cash, we're going to go into our cash payment journal. All right, and we're paying back what we originally borrowed plus the interest. They didn't tell us what the interest was. We have to calculate that. So over here I've got an explanation of how we figure out our interest. You take how much you borrow, $2,400, times the interest rate, so 10%, 0.10, times however long your loan is. So in our case it was a 90-day loan, divided by 360. Now 360 is your number of days in the year. And I know we really have 365, but for banking purposes, for our textbook purposes, we're calculating it over 360. Okay, so when you put this into your calculator, you can do that all at once. Okay, 2,400 times 0.1, oops, goodness, times 0.1 times 90 divided by 360. Okay, you don't have to do separate calculations. Just do the whole thing, $60. All right, so in our cash payment journal, on June 24th, our debit is going to be notes payable. Because if you think about it, down here, we credited notes payable, we're paying it back. So we're going to debit notes payable. Okay, $2,400. And then we're going to also debit our interest expense. Okay, so the notes payable is for the actual amount of the loan, and then we also had to pay the interest, and we know expenses are always debits, so that's also going to be a debit right here for 60. So we're in our cash payment journal, so if we are paying back $2,400 and $60, our cash credit has to be both of those, which would be $2,460. Remember, your debits always have to equal your credits. Okay, again, these special columns have nothing to do with what we're doing. We're paying back a loan. We're not paying accounts payable. Okay, you got to remember that because we cleared that out earlier and we made it into a loan. All right, so that check number was 362. And remember, in check numbers in your cash payment journal, you only have to put the number. You don't have to put a C. All right, so that's the third one. Fourth one, June 30th, we paid cash for the monthly payment on our line of credit, principal of $1,500 plus interest of $64.20. So in this case, they gave us our interest, which is nice. We don't have to calculate it. Okay, so June 30th, so back to our cash payment journal. And this time we're paying back our line of credit. So our account is line of credit, and then we're also paying interest. Okay, so you're gonna have your interest expense. Line of credit, when we originally took it out, if you remember right up here, it was a credit. Liability, we owe people money, credit. So when you're paying it back, it's going to be a debit. Okay, so the amount we paid was $1,500. So we're going to put that in our general debit column. And then our interest expense, they told us, was $64.20. So $64.20 goes there. So the total amount that we're paying back is your $1,500 plus your $64.20. So $1,564.20. That check number was $369. All right, so we're paying back our line of credit. So line of credit is debited. Remember when we initially took it out up here in our cash receipt journal, we got the cash debit. So our line of credit was credited. So down here, when you pay it back, it is debited. Expenses are always debits. All right, that's it for 18-1.